my bit of disclaimer over and done with. A lot of what we do today will be interactive because I believe in the saying, give a man a fish and you can feed him for a day, teach a man how to fish and you'll feed him for a lifetime. So we will be covering a bit of theory, or quite a bit of theory, but I'll try and brush over that as quick as possible because the main aim of today is to get you using solo accounts, or if you don't use solo accounts, whatever you do, proficiently. And with confidence, just knowing that the information that you're putting in there is correct. Please forgive me if I look the wrong way because I'm looking at the screen now where my camera is and I'm looking at the presentation and it just seems all wrong. I feel like I should be looking at faces. So what we're going to do today is just look around the software quickly and then cover these subjects. I'm not going to read through everything because we're behind time already, and this is in the front of your workbook anyway. Let's see, where do we go? My little clicker thing's not working, so I'm going to have to click the screen. So that's the second half of what we'll be doing. Right. I think maybe if we could go into the chat box maybe just to get everybody participating and not falling asleep. Let's just sort of have a look at question number 1. How do you feel when somebody mentions the word bookkeeping? So just in your chat box, throw me a word or a couple of words. And I'll see if I can find the chat box as well. There we go.
So Leanne says she feels time and money. Sue's terrified. I feel like ringing Donna. Jackie feels stressed. Sue feels like she's doing it wrong. Fran says muddled. Jackie goes, she agrees, she's terrified.
All right, so then also, can you rate your knowledge at the moment? So if you feel you've got no clue, put a 1. If you feel really confident, a 10. So just let us have a bit of a gauge where we're at.
Okay, we've got some honest people here. 1s, 5s, 6s from Sue. Jack's a 5. Pauline's a 7, of course. Leanne's a 4. Fran's a 7. So we're all over the shop, Donna. That should be helpful. Okay, thank you.
Can you maybe jot down in your book just the main reason for doing your webinar today? Just so that at the end of the session, we can go back and see sort of if we've met your needs for the day and if you just need a reminder of something you need to ask me. But just take a couple of seconds to write down your reason for doing the webinar today. And then following that, what is it that you hope to be able to do at the end of today's boot camp? And in following with your comments, here are a few little animations of frustrated, overwhelmed, makes you feel sick, you want to do anything else but your bookkeeping, and you want to make it disappear. Okay, we've all know why we're here today. Now, what we won't be teaching today is double entry bookkeeping, which is your old debits and credits, assets, liabilities, income, expenses, provisions, prepayments, the whole big gamut of your traditional bookkeeping. So if that's what you thought you were going to be taught today, then this is your get out of jail free card and you can leave, because that's not the sort of stuff we're covering today. So the tax department says that your bookkeeping system or record keeping system should be as simple as your business and your ability allows. So you don't need to be using complex software. You're better to use something simple and get it right rather than using complex stuff and get it wrong. And that's okay with the tax department. Right, Lynn, at this stage, I need to just jump over to solo accounts. So let's just end that and I will just jump onto here and just so that, there we go. You can see my website now, can you? No?
Yep.
You can see it?
I can.
Good. Can everybody see the website as opposed to this presentation? You're seeing the presentation. Lynn, can you see my website, the website rather than the presentation?
Nope. I'm seeing your screen.
Oh, I'm seeing the presentation, sorry.
I'm seeing your presentation. I'm not seeing your website.
Okay, let's skip that then. Let's go back to the presentation.
Donna, try minimising your presentation because this website might be behind it.
Okay, there?
Yep.
Can you see it now? No? Don't worry, let's not do a tour. Minimize, where's the presentation? Okay, start from current slide. Okay. Well, that saved us a bit of time. Okay, just on page 3 of your book, we've got some stuff to fill in. So what we really are trying to achieve is to have your information presented in an organised and consistent manner. And that way, if you give your stuff to your accountant, it's going to save you money because they're not wasting time trying to sort out your information. So if you are registered for GST, you have to show your figures exclusive of GST because that's the amount that goes on your tax return. If you aren't registered for GST, your figures are going to include the GST. So I think there's a little bit of a typo in that sentence. So it's really saying my expenses do show GST separately because I'm registered for GST, or they don't show GST separately because I'm not registered for GST. And then we just hope that you feel like this after you're all organised. So what does the ATO expect from you? Right, so there were a few people that said they were fearful of the tax department. Look, if you're doing the wrong thing, yes, you should be fearful. If you're not, the tax department are quite reasonable when you talk to them. What they really want from you is for you to pay your fair share of tax. And if you don't, you'll suffer the consequences. And these can be penalties or, in very extreme cases, jail. Be warned, the tax department has methods of detecting cheats, and these are through data matching. They look at if you're in the normal range of who's in your industry, and if you're in a business that deals with a lot of cash, you are a target, and so just be aware of that. And they're not really keen anymore of just blanket substantiation. So if you're claiming for your car and you go, oh, I just do 5,000 kilometres a year, I'm just going to claim that. They're really cracking down on things like that and saying, well, okay, tell me how you got to 5,000 kilometres a year. Otherwise, they're going to not allow you claim. And we will be talking about that a little bit later on. So what the ATO does expect from you is to be honest, to communicate with them. If you're having difficulties or you get into a difficult situation, just talk to them. They are quite forgiving. And if you do make honest mistakes, they just expect you to rectify them and then relodge. So they aren't Hitlers, and they're trying not to be seen that way. So in your workbook on page 4, generally speaking, what do you think you need to do to comply with the tax department?
People records and receipts.
Yes, that's a good one.
Document them.
Anybody else want to throw something in there?
Keep account of your sales. Everything's
Yes.
going in and out.
Submit your returns on time.
Yeah.
Yep. Yeah, so basically they want you to keep track of your income, prove all of your business expenses, calculate and pay the correct tax, account for GST and submit a BAS if you're registered, and then any other compliance that you might have. So if you have a payroll, enter and send all of that sort of stuff. So what do you achieve and why do you keep books? So first and foremost, it's the law. You have to keep books under Australian law. And one good incentive is that a lot of businesses fail if they don't keep good records. So you're already in front if you're keeping records. Okay, and just another one, just to keep us awake for the moment. Can you jot down a few things that you also achieve when you're keeping records for your business?
Right now I can't hear them at all.
But we can hear you, Sue.
All right, my son, this is my son. He's just fixed my headphones, that's why. These are his gaming headphones, because I sat on mine and then dropped the other one in the coffee, so.
Yep, can hear you now, Sue. Good.
Yeah, sorry. I'll be quiet. Thank you, darling. Right.
Okay, anybody want to throw something just out there? Since we're in a small group, we can sort of get a bit of feedback.
As you know, I had a fire, so I've managed to get some of my records, the ones that were in plastic folders, like these, but some of them are fire damaged, like these. So obviously it's a slightly different concept to most people. So I've probably got about 70% of my records. The apparatus that I had taken the photos on died in the fire as well.
All right, well, we'll see how we can go at reconstructing what you've got, Sue. So anybody want to throw something into the mix about how good business records help your business?
I've always, oh, sorry. Talking at the top of each other. Well, I actually do keep very good records. I haven't always, but I do now. And I find it really good for making projections and really understanding my real cash position, and budgeting and things like that. All those horrible swear words that I used to use before I understood all this stuff. But it's so powerful. And I keep records for my personal stuff and my business stuff. It's pretty tight.
Yeah, yeah. Anyone else?
I was about to say the same.
Yeah,
It makes, and it gives you accountability. You know where you stand. You know what you've got. I'm not saying that I'm perfect at it, but I can see the benefits of it.
Yeah,
I found it very useful recently when I was refinancing, and being a sole trader with Hawkins Marketing, I was able to do the reports straight out of solo accounts, which made it really great because it made my business look a lot more professional than it is.
Yeah, I think the incentive of knowing there's other things that you do with your figures that are useful, it sort of makes you want to do your books a little bit more than just doing it for the tax department in income tax returns. So a few of those reasons that you've come up with, I have here. I did have one lady who ran a business where she sold horse equipment, and she rang me quite excited after a period of time and told me that she'd been able to negotiate better prices with her supplier because she could tell him how much she was selling, and I wanted to say to her, he already knew how much you were buying, it's just that you didn't know how much you were buying, so you were in a position of power now to get a better price. So but that was really exciting to hear that from her. And if you're still not convinced about why you should be doing it electronically, there's a whole pile of reasons, and down there, Sue, fourth from the bottom, is backups in case of fire and theft. So let's hope you're in a better position. Well, let's hope you're never in that position again, but it just goes to show that it does actually happen, and it's worthwhile having electronic records. Okay, this one is where do we get the information from when we're entering? What sort of documents can we use? So we'll just talk about the different types: source documents, proof of purchase, and written evidence, and what you do if you don't have one. Those pictures on the right there are actual people's receipts. So they're not doctored pictures. They are just receipt piles that I've seen. The top one is my nephew's glove box. And the lady with this box here, she told me that she had her records, they were all organised. Her records, she told me, and then she showed me, and I went,
"That's mine."
Okie dokie.
Yeah, I have a box that looks like that now.
Yeah, this is me being organised with my A4.
Okay, so source documents when they're mentioned, invoices, sales invoices, supplier invoices, cash register tapes, a credit card receipt, a bank statement. Other forms, which would be proof of purchase, maybe, or let me just say before we do the next bit, is that all purchases over $75, the person selling it, or if you're selling it, you have to provide an invoice. If somebody wants it below that point, you have to give it to them. So it's best to just give them anyway. The $75 is that GST point. So $75 plus GST. So the $82.50 is the number you quite often see bantered around. You have to give one, but it's best to just give them anyway. So other proof of purchase can be a debit or credit card statement, lay-bys, reference numbers given to you. So when you pay for something over the phone, you will get a reference number back, and you can just write that on the receipt. Somebody may email you a receipt, so that's quite often the case now with software subscriptions. You'll get an email rather than a receipt. And
Can I just ask with that one?
Yep.
With the email ones,
Yeah.
is it a good idea to print them off and then take a photo of them, or
you can actually add PDFs to solo accounts and most accounting systems now. So just PDF it onto your screen, so your home screen, and then just pick it up as an attachment. So you don't actually have to print it, take a picture. You can usually just add PDFs as they are. So, but yes, you should keep a copy separately.
Well, they're easier. So you should really have a hard copy.
Yeah, you do. Well, it depends. I mean, if some people's systems are completely paperless, and one of the companies I actually do bookkeeping for is a multinational company. So they're in South Africa, Australia, New Zealand. I never receive a piece of paper from them. Everything's emailed to me. I attach documents into their bookkeeping system electronically, and it's a totally paperless system. So you don't have to print things out. You just have to be able to find a copy of them if it's requested.
Okay, so can I just ask Donna, if you're purchasing something either at Officeworks or whatever it is that you're purchasing for your business,
Mm-hmm.
if you've put it on a credit card, do you need to also keep the receipt?
Look, the GST law and income tax law are two different things. To claim GST on a tax invoice, you need to have a tax invoice to prove the GST. Under income tax law, you need to have proof of the purchase. So I would keep a copy of the invoice. The other thing you'd have to be careful for, and this is one point, a lot of people will put their fuel on their credit card and go, I'll just use my credit card statement. But the tax department doesn't actually know whether you've bought fuel. It might say Caltex, but they don't know if you've gone in and bought food, cigarettes, or whatever. So they may then start to go, well, sorry, that's not acceptable because it just proves that you went to Caltex. It doesn't prove what you actually bought. So I'm a big one for getting the actual invoice and receipt and keeping a record of that.
Can I just ask another question regarding petrol?
Yep.
When I was a rep, I used a couple of different cars, and I sometimes go out in my husband's car, sometimes use my daughter's car. So the mileage is all over the place.
Yep.
It's not one car consistently for everything. Yep. It depends who's parked on the garage, basically. Yep. And if you want to claim your mileage, you're supposed to have a consistent thread on your mileage reports.
We're going to talk about mileage and logbooks later on, Sue. So can we keep that one till a little bit
Sorry,
later?
it was just yeah, sure. It was just
no,
to hang it onto
not,
the petrol thing.
not a problem at all.
Oh.
And then to prove. So, sorry, somebody's going to ask a question?
I'm just on a conference call, darling. Can you tell?
Okay.
No,
Sorry. So the other forms of evidence you have to have, and as sort of Sue was alluding to, you have to be able
take
to...
everything off. Did you have a good time?
What portion? Thanks, Lynn. You have to be able to prove how you came to the figure. So if you're only claiming a portion of the fuel, you have to keep the evidence of how you came to that figure. So keep your logbooks, keep the calculations. If you have depreciation schedules, because you've claimed something over a couple of years, you need to keep all of those figures. So it basically boils down to any figures that you use on a tax return or a BAS, you have to be able to show how you came to them. So that's basically what written evidence means. Oh, did we miss one? No, okay. I thought we had a slide on what you did if you didn't. Oh, so if you say, so there's a case for maybe you bought something off eBay or something like that, or sorry, I lose my words sometimes, or from an ad in the paper or Facebook Marketplace or something like that, and say it was an office desk, and that person's not probably going to, if it's a home person, they're probably not going to give you an invoice. So to prove that, I would probably just maybe take a screenshot of the ad that you bought it from, and then just keep that as evidence. I mean, it's just, you know, just in case you're ever queried. So there's a little slide. Sorry?
I said that was good advice.
Yeah.
That does happen a lot, doesn't it?
Yeah, it does, and like, because you're paying cash, you know, look, they don't care less that you're claiming as a tax deduction, so why would they be bothered giving you a tax invoice? So yeah, just a bit of proof is good to keep. So there's a spot in your workbook to just maybe jot down for future reference all the documents that you should be keeping, just so that from month to month you can just go back and check off your list of source documents, so you're not having to remember every month. So how long do I need to keep my records? So 5 years is the general rule from when they're prepared or obtained, whichever is the latest. But there are a couple of circumstances where you have to keep them for longer than 5 years. This would be if you've got a carried forward loss on your tax return, you need to keep paperwork until that loss is gone, because that's a figure that's on your tax return, so you have to be able to substantiate it. So you need to keep the paperwork that is associated with that carried forward loss. So just keep that in mind if you're in that situation. Depreciating assets. So if you had something that needed to be written off over 10 years, so it might be a commercial building that you own, so you're amortizing that over a longer period of time, you need to keep all of those records from when you purchased that building for the full period that you're depreciating it. If you've got capital gains tax, same thing. If you bought a building, it is an extreme case, if you bought a building all those years ago, and you end up having, you're making a profit out of it and you have to pay capital gains tax, you need the paperwork. If you're in dispute with the ATO, you'll have to have paperwork that goes back over that period of time. And if you've got employees, the general rule is 7 years for employee records.
I'm also on a committee of an incorporated group, and in Western Australia, for incorporated groups, you also need to keep the records for 7 years.
Yeah. And then I think in some, I mean, they changed, like a school, for example, where they've got records of students. I think they have to keep them about 20 years. So there are some extreme cases of that.
Also, superannuation, if you haven't been paid superannuation and you have your records as far back, because the tax only
department only keeps 5 years. If you have your records, then they can claim it.
Say that
Yeah,
again, please.
Sorry?
Say that again, please. I didn't understand the point.
If you haven't been paid superannuation, as an employee or whatever, as the tax department only hold 5 years records, so they only go back 5 years. But if you have records further than that, then you can claim it.
Okay, yeah. Thank you.
And hopefully a lot of that will be solved soon because the superannuation amnesty has come into play. So hopefully all those back people that haven't paid super will pay that in the next few months. So that would be nice. Okay, what expenses can you claim? So maybe just pop to your book, page 8. Just make sure that we'll just... Okay, so first of all, they are described as any ordinary, necessary and reasonable expense that helps you to earn your income. So if you can't get that correlation between helping you earn your income, then you can probably scrap it straight away. So I'm just making sure I'm not skipping my slides here. Okay, so which of these items do you think can be claimed as a business expense? A suit, a cup of coffee, sunglasses, and music.
I would say the suit. Suit and the coffee, because if it's a business meeting with somebody, surely you can claim that.
And
Coffee, definitely. Really.
I would say everything except the iTunes.
Even
Would it somewhat...
my husband claims the sun cream and those glasses because he works outside sometimes.
Yeah, we do that too.
Yeah, I was going to say, it depends what the business is.
Yeah, so that's a question.
If you're a DJ, then iTunes may be something that you could claim.
Yeah,
right.
yeah.
Yeah.
So you're getting the idea that you know, not every business can claim the same stuff. You know, it depends on what you do. So here's just an example. So the iTunes, if you're listening to music while you're at work, or if you're a music teacher, listening to it just because you're at work doesn't count. But for the music teacher, yes, he could probably get some music that he can claim as a tax deduction. Same with a cup of coffee. You meeting someone for a coffee during work time as opposed to having a meeting with coffee. So just because you've met someone and it's work time doesn't mean you can claim it. But if you're having a meeting as such, it's allowable. And we'll talk a bit about that later on because that's one that confuses everybody. Sunscreen, at lunchtime, I go out and sit in the park to soak up a bit of sun. I actually work in the sun. It's a requirement for my job. So no to the little sit in the sun at lunchtime, but yes, if it's a requirement for your job. And the suit, well, this one's, well, not tricky, but here's the explanation for this one. So you wear a suit because you're told to look smart at work. It's, you know, it's a part of your job to look professional. Or your suit is a uniform. So unfortunately, the suit isn't allowed because you can wear that out as well. So you can use it in a social situation, whereas a registered uniform, you're not likely to wear that to a wedding. So your suit, even though you're required to sort of look smart and probably wear a suit, it's at your own cost.
So should you be buying your suit from a certain place then, or, you know, if you have a business to look professional, as say your uniform is a suit, would you be needing to buy it for a certain place, or?
It actually, the business actually has to register the uniform as a registered uniform, or it would have a logo or something like that on it, so that it shows that it's a uniform as opposed to a suit. So no, just because you have to wear a suit, you have to pay for it yourself. So that's just a bit of tough luck.
So what if we require all members to have BWA branded bras and knickers? Would they be able to claim their bras and knickers?
If people can see the branding, yes. And we were talking about boobs in the boardroom, Lynn, last Friday night's drinks. So maybe that's what you should be doing.
This is not helping women's case at all. Thank God. Oh, hang on. I'm going to have to cut all this out of the recording.
Okay, so the age-old question, can I claim coffees? This will, I've got some of my little pages here out of order. There goes my notes out the window. This depends on 4 questions. And the 4 questions are why the food or drink has been provided and what were the reasons. So if it's to have a meeting and talk some business, yes, it's allowable. If it is just a social catch up with someone you know through work, no, it isn't. What type of food and drinks provided? So if it's just a coffee and a cake or a sandwich or, you know, a light salad or something like that, totally acceptable if you happen to be in that meeting situation. So you may have met for coffee, the meeting's gone too long and you've said, gee, it's lunchtime, let's grab a bit of lunch. Fine, you can claim the lunch back. But if you've had a coffee and you've thought, oh, gee, look, it's a great day, let's just go to that beautiful restaurant that's got those great views of the city and let's just celebrate our great new business venture. You wouldn't be allowed that because that is entertainment. Even though you might be going to talk about business, it's just not allowable. The next one is when is it being provided? So if it's during the day, it's probably reasonable to expect that it is a business meeting. If it's at night time, you know, yes, you do have meetings at night time, but it starts to smell a bit like entertainment if you're going to a restaurant at night time.
So how would you depict that on a tax return then? Because it's just hearsay, surely.
Well, if they ask you for the receipts of your meeting expenses, and they see that most of those receipts are time dated, and then they would see what's on it. So they'd start questioning what you've done. So if it's a refreshment during daytime, it is from meeting. But if it's a meal and there's a bottle of wine and a restaurant, they'll call it entertainment.
So if it's just the occasional coffee, literally.
Fine. The tax department understands now that a lot of people work from home and they need to have meetings in cafes. So as with all business expenses, it's up to you to substantiate why it's a business expense. So my reasoning is if I rented an office and you came to my office and I gave you a coffee, the coffee that I've got in my office is tax deductible, and so is the rent that I pay. But if I don't have an office and I decide to meet you in a cafe, you can't expect the cafe owner to let you sit there for free because they've already got expenses. Yeah, so exactly. In that case, you pay for the coffee and you get the rent for free. So it's just, to me, it's the same situation, but it's flipped. You're paying to use the space, and the way you pay for that is by buying a coffee there. Yeah. And you are allowed to have a refreshment during a meeting. So, it's totally acceptable. You hear very differing views on this. I belong to an organisation called the Institute of Certified Bookkeepers. That's a hoot of an organisation. But they are in direct contact with the ATO, and they have on their website in their help section that the ATO has said that these coffees and refreshments during meetings are acceptable deductions. So you do read lots of places that it isn't, but it is. If you're trying to disguise something that is entertainment as a meeting, you do that at your own wrath. You can call it marketing, you can call it whatever, but if it looks and smells like entertainment, it's entertainment. So
every workshop that you go to, you really need to download the paperwork for the workshop and then add your receipt to that.
Or put a note on it. Notations are really good. If you can just say, business meeting with so-and-so, or went to a workshop, or went to a networking function. I claim things that I have at networking functions, because really it's a bit hard to walk into one of those and, you know, order a soft drink. But if I'm queried about it, then it's up to me to substantiate that. So that one, bit borderline, but I claim them because I just think that it's part of going to that networking meeting.
We've actually been asked, Leanne and I belong to one called NRG, and that's where we met. Well, sort of. Anyway, we've actually been asked by the lady who runs it to make sure that we do buy coffees when we're there, because that's part of the reason that the guy allows 25 people actually to sit down in his coffee shop for nothing. Otherwise, we're actually taking up a place where somebody else might go in and actually buy a coffee.
Yeah, that's right. So it's good to keep that in mind, because we should be sharing it around, really, shouldn't we?
Yeah.
Look, the whole, I know fringe benefits tax and all those sorts of words pop up, bit outside the field for what's involved with sole traders, and, you know, it's a big organisation thing, and that's more about entertainment, not a refreshment. And the reason this came in was because, you know, in the 80s, you know, everybody went out for business lunches that started at midday and finished at midnight, and they drank really expensive wine and, you know, the old boys club stuff. You know, it was just, people were claiming ridiculous amounts on the income tax return under the guise of a business meeting. And so because it was abused, the system had to stop. So yes, it might be a genuine business meeting, and yes, you might have to genuinely take people out to dinner and schmooze them, but you know, it's just, no, you can't claim those things. But yes, coffees, claim all of the coffees that you have in business meetings.
Yeah, and sometimes food as well, because if it's a full day at like a workshop, you have to eat something. So
yeah, that's right. Yeah, and people wouldn't expect you to open your lunchbox in a workshop. You know, it's kind of one of those things, you know.
It really raises your profile, doesn't
it? Yeah. You know, I think, look, the real thought of is if you would normally be able to bring your own food or go home for your own food, you know, then you can't just substitute that with a bought meal. But if it's sort of wouldn't be expected that you would go home from that workshop for your lunch, then buying it while you're there is pretty acceptable. So
thank you.
Donna, could you just say again the words that you used that clarify it's an expense? You said ordinary, necessary, and there was two others.
Let's just jump forward. Sorry, that's one. Oh no, here we won't do that. Ordinary, necessary, and I should know this.
Reasonable,
and help to earn your business income.
Yeah. Okay. Thank you.
Okay. Now, so what you can do, and you can do this one in your own time, is you can actually go into solo accounts if you've signed up, and in the tutorial section there are some little booklets that I have put together for tax deductible expenses within an industry. So while I don't like lists so much, I quite like the have a look at it. Does it help you to earn your income, which is kind of the test, then use it. But there are booklets there. So in your own time, go and print one out and have a look through it and see if there's anything that you're missing out on claiming. And that'll help you with tax deductible expenses. If you're unsure about what you should claim, as a BAS agent, I shouldn't give you tax advice on what you can and can't claim, but a tax agent can. So if you've got some curly ones, save them for your accountant or tax agent. All right, how do we work out what is tax deductible? So once again, it must relate to your business, and the deduction must happen in the same period that it was used to earn your income. What's an example of this? So what they're talking about here is if you bought a computer and it was to last 3 years, you claim a third of it in each period, because that's when you earned the income from it. A big piece of machinery, you know, same thing, those sorts of things. This one gets a bit curly at the moment, because they allow you now to do these instant deductibility. So, you know, those rules kind of change from year to year, but that's just a general rule that it's no good. You can't really have bought something 4 years ago and then, because you're using it now, claim it, you know, bought it personally and now you're claiming it as a business expense. So
can I ask one
Yep.
thing then? Because obviously when I had my setup costs,
Mhm.
and I've nowhere near covered those, for example. So my course was about 7,000. So in order to claim that back, you would do it over a period of time, or?
Setup costs are a bit of a funny one. You just check this with a tax agent, because setup costs, you're doing them before you've actually started earning your income. So some of the rules change in different industries. So just check that one. It may have to be written off over a period of time. You may be able to claim it straight away. So just, double check that one.
Thanks.
So let's just quickly see this calculation done. Your assessable income is $120,000. So not all of your income is assessable. And an example of one of these will be if you are going to get one of these grants or business assistance packages from the government because of COVID-19. So maybe one of the $10,000 handouts, that won't be assessable income. That's just going to be a gift given to you from the tax department. So that won't be included in your income. So the calculation is assessable income, less tax deductible expenses, because not all of your expenses will be tax deductible. So the ones that aren't tax deductible gives you your taxable income. And this is what you're paying tax on your taxable income. So the higher this figure is, so by claiming all of your expenses that you possibly can, this number will become lower. So you'll be paying tax on a lower number. So it's important to get your tax deductible expenses. If you're spending the money, it's really important to record it so that you can be claiming back all of your expenses. So just you claim tax deductions normally two different ways. Your day-to-day running expenses you claim immediately, so that's in that financial year. Assets are over a number of years, and as I said, so it's based on how long the equipment will last. So if it's going to last 5 years, you roughly claim a fifth each year. But with the immediate deductions that are coming in now, you can write off $150,000 in one go. So, you know, and that's just to stimulate the economy and give you higher deductions so that you can have more money to spend. It's important to keep track of the date, because these new rules come into play from a particular date, so they're not necessarily for the whole financial year. So if you're going to spend money, you have to keep track of the date you actually purchased it. Some expenses aren't tax deductible, and here's an example of them. Parking and speeding fines. Even if you were out doing business, if you're breaking the law, you can't claim it as a tax deduction. Loans to other people. So if you're lending money from your business to somebody else or another business, a loan isn't actually an expense. It's just a loan. It's a movement of money. If you take money out of the business as the owner, if it's not taken out as wages, it isn't tax deductible. If part of the expense is a private portion, so if you use your motor vehicle for business and private, you can only claim back the business expense, not the private portion. And any expenses that are reimbursed to you, you can't claim because you've paid it out and you've got the money back. So it's a nil effect. So you can't claim expenses you've been reimbursed for. Okay, and ones that people tend to get quite confused about, and it's probably worth noting these in your book, and that's why I've put it there. You can claim commercial loans, so the spending and the interest on the loan. So if you've borrowed money as your business to buy, say, a new piece of equipment, that piece of equipment is tax deductible, and so is the interest that you're paying on that loan. If it's a personal loan, definitely not tax deductible. Deposits and part payments, yes, they're deductible, but if you pay a bond or a security deposit, it's not tax deductible. So this usually, an example of this is if you rent a premises and you pay a bond, it's an asset of your business, so it's like a bank account. It's not an expense to your business. Wages you pay to employees are deductible, but if you draw as an owner, they're not tax deductible. So they will either be reducing a loan account or go to a loan account, or if you're a sole trader, the drawings are part of the profits, so the calculation is different. If you spend little amounts of petty cash, those receipts are claimable, but if you, like I said, if you're reimbursed for them, you can't claim them. Anyway, that might help, that little table, if you can't quite figure something out when you've got an expense. And just a warning, if you have a tax agent or somebody like that do your tax return, you are still responsible when you sign that declaration at the bottom saying that everything on there is true and correct, and that you are able to provide proof of what's on that return. So read the return before you sign it. Don't, if you know your accountant or your tax agent is doing something that is you're not happy with, you shouldn't be signing the declaration, because the tax department will come after you because you've signed a declaration to say that it's true and correct. But in the same regard, don't ask your accountant or your BAS agent to do anything dodgy either, because they are also held responsible and can lose their license. So, the tax department's really tightening up on responsibility for what people claim. So it's no good saying, oh, well, I didn't know, my accountant just did it. You've signed a declaration, so you're responsible. So just keep that in mind. All right, categorizing your expenses. There is no, oh, I've lost. Oh, sorry. Oh, that did that all by itself. No. Recent. Okay, sorry, let me just get down to where we're at. Must be coffee time. Computer's playing up. Slide. Okay, sorry, oops. Sorry, you've got the wrong view, haven't you?
We've got you, and everyone, depends on how it's set up.
Hang on, let me just try and get that over on there. Play from current slide.
Show of hands, how many have actually in this call are using solo accounts for your bookkeeping?
Not yet.
Yeah. Okay. I've been using it right from when Donna had it as hard hat, pocket bookkeeper, and it's been a godsend for me.
I will be using it.
Yeah,
Leanne's using it,
I
aren't
will
you?
be too.
Leanne's using.
I'm just going to pull that other one out so that we can't see that.
I'm using it and I can vouch. Donna is awesome.
Thank you. Now I have lost sight of all of you, so can you see that now, Ben?
No.
Can you see the display, the PowerPoint display?
Nope,
No.
it's not. Your screen share's not on. That's okay. We can just maybe what we
Let
could.
me just.
Note to self, good idea if I have your PowerPoint as well, and then I could be sharing your screen for next time. What do you reckon,
hang on,
Pauline?
let me just.
Can she email it to you now? See if it'll work.
Hang on. Don't say. So let me just see if I can just start it up again from here. I don't even know why it stopped.
Must be having a morning tea break.
So who's coming to the pajama party later on today?
Was that on the BWA site?
Yeah, in my Zoom room. If you have a look on the BWA calendar, it's a different. Okay, we've got it, Donna.
We've got it, Donna. We're in.
4 o'clock Perth time. That'll be. What is it? What's the difference now? 6 o'clock East Coast time. So everyone's welcome with their jammies. Pajama party.
Isn't it 3 hours still over east?
2, I think now.
It's now 2. I think we're out of daylight saving as of April.
Yeah, not till Sunday though.
Oh, is it?
It's the first day in April as of Saturday night.
Well, you would know. You're the travel consultant.
I do know.
It's still going the opposite way round. Bugger.
So what do I categorise my expenses as?
Hang on.
I can see that screen. Can anybody see that?
But you're seeing the wrong one, aren't you?
No, we're seeing the right.
No, I can see why do I categorise my expenses?
Okay, so you're not seeing the presentation one.
We're seeing the one you want us to see.
Oh, okay. Well, they've swapped screens in my office, but anyway, so let's go with that. Okay. So categorising, there's no hard and fast rules with the tax department with categorising, except for there are certain categories on tax returns that they like you to fill in. That is just information gathering for them. So you will I'll give you a couple of examples of the ones you have to keep separate from them, but the rest of it is up to you. And the reasons that you do these, so some are ATO requirements on your tax returns. Other ones are so that you can analyse your spending. So you might, you just look at what information you want to extract from your bookkeeping and maybe break your information down a little bit so that you can get that information out. The categories in solo accounts are preset because this is a point that confuses lots of people. What category should I have? So initially when it was designed, it was like, let's put in the ones that most people will get the best benefit from. So you have to kind of go with me on what's there, but you usually find everything that you want there. One little feature that I would like to have in our next round of upgrades is to be able to turn off some of them, because at the moment you whip through all of them to find the categories you want. So we're looking at a way to just turn off the ones that you don't particularly want. So that's hopefully something that's coming. It can help you to budget if you know where you've been spending your money. It'll help you with budgets going forward. Same with cash flow, if you can see where you're spending money. It also helps you to split business and personal by having different categories, and it helps you with the GST calculations. So when you're categorising, be consistent. If you're not sure what to do, just be consistent. So if you're consistently wrong, it's really easy to fix a consistent mistake. If you've, 1 month you put it to one category, next month you put it to a different category, and then a different category, it's a real mess to fix up. So just be consistent with the way you put it in, even if you're consistently wrong, because it can be fixed much easier that way. Write a list. Like if you don't remember from month to month or 3 months to 3 months, however often you do your books, write a list. And I tend to do this because I do some contract bookkeeping as well, and everybody's business is different. So when I haven't been there for a month, you know, I'm thinking, oh, what can I do here? So if I can have a bit of a list, it just helps me save a lot of time. Or do your data entry on a more regular basis so you do remember.
Can you go check your English, please?
It's mum instruction in the background.
Sorry.
That's all right. So in your book, you've got a list of categories from solo accounts. They are similar to any other accounting package. So at this time, maybe just have a little bit of a look down the list and maybe just highlight the ones that you think would apply to your business. This also helps you find them later on. The column on the right is to help you write some notes. Like I said, keep a list. So it, you know, sometimes it's just easier to be able to quickly look and go, oh, that's where I normally categorize that. Or I put a couple of different things in the same category. Or you might, you know, just write the supplier's name or where you normally get that from. So, you know, oh, gee, I put that expense through my PayPal account. So make sure you go there to check for that expense. That just stops you having to remember every time you do your bookkeeping where everything is, and you know, it just saves you time, because it's a real frustration. Look, this is not everybody's favorite job. I get that. So it just, if you can speed up the process, you know, this is a way to do it.
Donna,
yes.
what would you classify as, a few slides back,
Yep.
expansion expenses? What do you particularly mean by that?
So where did I put that? That was probably in the asset. Was it? Where was it?
It was a couple of slides back, and it was in the little circle, little pie graph.
Oh, that's just something I grabbed off the internet.
Okay.
But that would be so expansion expenses.
So that would that be something like if you decided to do I don't know, expand your product range into something quite different, or something like that?
And it could just be like a development cost.
Yeah.
So something that's happening while you're getting something happening.
Yep.
So yeah, something that's just because you might. Sometimes people experiment with things, so they want to isolate those costs.
Yeah.
So you sort of keep them separate until you know whether you're going to go ahead with it, and you know, and it's particularly in these days of R&D, you know, people keep those costs separate, and because you can claim your research and development grants and things like that. So and just categorizing, just so that it helps you get information later on quickly and efficiently, is how you should categorize them.
Yep, that's great. Thank you.
There we go. We'll click here.
Can I just ask, what would be the difference then between inventory and equipment? Because if I've got couches and I've got stools to sit on, and then I've also got disposable stuff, which is what?
So inventory is something that is likely to be sold within the next 12 months. So it's something you turn over, as opposed to furnishings, which may last over a period of time. So a big company would, within their balance sheet, they have their assets classified as current assets and non-current assets. Current assets are those that will be used up within the current financial year. Non-current assets are those that are used up over a few years. So inventory is typically a current asset because it will be used up or turned over within 12 months, hopefully.
So therefore, just on a tiny scale, the pigment ink that I use, or the blades and things that I use, that are used as like a disposable, really, they would come under inventory.
Or are they just an expense? Like, I mean,
well, that's for me. They would just be an expense.
They're just like if they are under $300, they are expendable within the current year anyway. So anything that costs you under $300, I would just immediately put as an expense.
Oh, that's easy then, because 90% of that is.
Yeah, like if you buy a dozen pens and it's going to last you 5 years, you don't like put the cost over 5 years for your pens. Like they expect that, it's normal to expect that minor costs are just expensed in the year that you incur them.
Okay, that's everything basically goes under that pretty much then, apart from the additional equipment.
And look, and I always use that $300 as the gauge. And if in the categories for solo accounts, there are 2 categories, one for things that are under $300 that you consider an asset, and ones that are over $300, because the strict wording in the depreciation laws, there's a $300 amount, but the government keeps changing it to offer incentives. So we've had, a $10,000 instant write-off, a $20,000 instant write-off. Now we've got a $150,000 instant write-off. So I always just say, use the $300 rule, and at the end of the year when you go to do your tax, you look at what the current rule is, and then those things that you've put in the over $300 category will probably turn into expenses anyway.
Yeah, for me, there's nothing like that. The other thing is, if you have, say, an invoice that's got like 25 different small things on it, and so I bought it over the internet, but the whole lot comes to over $300. Is it just the little bits that count?
Yeah, each line item, not the value of the invoice. Each line, each item.
So when you put those into your expenses, you have to itemize each and every single one, or do you itemize just the whole invoice?
Just the whole invoice.
Cool. Okay.
Yep.
In pharma, you have to itemize each and every single item. That's what I was asking.
No, just going over. Oh, look, I know people that do that, and to me, it's just. If it helps you run your business,
no,
go ahead and do it. If it doesn't make a scrap of difference and it's just time wasting, and just being a little bit pedantic, then don't do it. Just totally.
So it's one invoice with a group of stuff on it is absolutely fine.
Totally acceptable to just put it in as one invoice.
Cool.
And what category would you put that in as? Because it's a mix.
Look, sort of
for me, it's under an expense, because it would probably come as I think I've had one of about 500, which is after I set up again and I had to do it all over again.
Just look, for me in Sue's business, I'd be putting those into one of those very first categories where they are just a running cost type thing. Let me just see what the category says.
Because you'd probably come in at the same, wouldn't you?
See, I'd do the first one. The first one in solo accounts is called products, supplies, stock and materials. I would put those things under there because they are just general day-to-day things that help you run your business. So I would just put all of those. I wouldn't class those as assets or tools. I guess they're tools of trade, but I would just put those in the first category because they are just your day-to-day running expenses.
Okay. There you go, Jackie. I asked the question, you got the answer.
I get because when I make up a gift box, I've got the products, but then I've got the box, I've got the wood wool, the string, the whole, and so I'm always like, do I have to like itemize every single thing that went in that box?
I wouldn't, unless you keep an inventory system. So a big company would probably put all of those items into an inventory system and draw down on their inventory system. In a small business, if you just need to know, you've got it, by looking at a couple of invoices, your costs and your cost of sale, so how you can work out whether you're making a profit on an item, then you don't need to detail it. And so, just chuck it all into the one category, because at the end of the year, you want to know, I've sold all of these gift baskets for $500,000. Let's go with that one. $500,000 and they've cost me $200,000, so I've made a nice little profit. But if you're at the point where you're making $500,000, you might want a little more detail in your business. So it's scalable. So as a small business, probably you're just putting through one category. If your business grows, you might need to look at a system that tracks inventory quite closely. So does that answers that question?
Yes, thank you.
Yeah, good. So just on the screen now, hang on, what have we got here? I'm looking at my screen, which is different to your screen. these are the, sorry, I've got your faces all over my screen. These are some of the categories that are on a tax return. I have got those exact categories within solo accounts so that when you go to do your tax return, you're just transposing those figures onto a tax return. There are other categories on a tax return, and they just want you to add all of those other ones up in a lump sum and throw them on your tax return. So while they want a little bit of detail, all of those other categories are for your benefit so that you can track what you're spending. The tax department just wants them lumped together. So don't get too bogged down on getting the exact category. Really what they want to know later on is, can you substantiate the expenses that you're claiming? If you happen to call them the wrong name, it's not a real big deal. The only time that would be a concern is if you've got, say, motor vehicle expenses and you can only claim 70% for business. You don't want to be throwing motor vehicle expenses into something that you claim 100% of. That's probably the only thing you've got to be watching out for.
So you're talking about here, like you are going direct to the taxation department rather than through an accountant?
Yeah, the accountant would have to fill in the same boxes. Yeah, they're just standard ATO labels.
So with using the solo software, you still need an accountant?
No, definitely not. No.
Oh.
You can do all your own stuff.
Oh,
You will be able to print reports to do your own tax return and your own BAS. But some people feel more comfortable getting their tax return done by an accountant or a tax agent because they might have rental properties and you might have, all sorts of different things. So you don't feel comfortable doing your own. By all means, you can do your own returns and you can use the information that you get from the system. Because all you're going to do is give it to a tax agent, and they're going to use the same information anyway. So if you're comfortable doing your own tax return, by all means do it. It's cheaper.
Okay. I'm very attached to my accountant, I have to say. But yeah, okay.
Yeah. See, I have very mixed feelings about accountants because I'm a bookkeeper, and sometimes they use a lot of smoke and mirrors to make themselves look important. Other times they are exceptionally good value and they can save you a lot of money.
Can I say something here in my fuzzy voice? That I do my BAS. I find this is really great because it spits out my BAS numbers. I get all that done. I then hand over all my stuff to my accountant at the end of the year, including my logins to solo accounts, and they do a quick due diligence and they love it because the time now to do my tax return for the Hawkins marketing part of all the bits that they're doing for our various entities is so quick. They love it. My accountant loves it.
Okay. Excellent.
Sounds good.
Okay. For those of you who aren't registered for GST, still listen, because people will be charging you GST. So there are a few little tricks that you should be aware of, just so that so don't turn off the talk of GST if you're not registered for GST. As we know, the rate of GST in Australia at the moment is 10%. If you're registered for GST, or you're required to be, so if you're over that $75,000 threshold, you need to hurry up and get registered. But you need to be charging GST because the tax department can still make you pay it even though you didn't charge it to your clients. So if you're registered for GST or you're required to be registered for GST, you have to charge GST on the goods that you sell. And you can claim the GST back on goods that you buy, except for if they are classified as GST free or input taxed. You don't necessarily have to understand that terminology, but I've given you a printout of that table that you can see on the screen back on page 17 of your workbook. You've got that table. So some things that you might want to check, things that people get confused about, commercial rent will have GST on it, but residential rent won't. Merchant fees have GST on it, but bank fees don't. I can't see my screen, so what's it say? Interest received and paid doesn't have GST on it. And then some, they've called them on this list, telecommunication supplies. That's phone cards. Things like phone cards and gift cards, they don't actually have GST on them. The GST comes into play when you spend them. So if you bought someone $100 phone card, they would be able to make $90.90 worth of phone calls because GST would be included in it at that point. So if you happen to buy gift cards as gifts for clients, there is no GST in it. Same as if you buy phone cards as opposed to having a phone bill, there is no GST in a phone card at that point. So that little table there might be of some.
Can I just ask you a question? It's not related though to GST. When I make up a gift box and I'm giving it to somebody and I'm just doing it at cost price.
Yep.
Is that okay for me to do that?
Yes, it is. Yep. You
And the same as like products, like I might gift it's someone's birthday or something. I'll just do it at cost price because I'm not going to pay the extra margin.
Yeah. Look, you're allowed to you're allowed to sell things at cost price if you want, but that's not why you're in business. You're in business to make profit. But if you want to do it as a gift for someone, yes, you're allowed to.
That happens often. Well,
yeah, probably gifts usually have to be sort of. There are different rules. Like if they're sort of under the $100 mark, nobody's going to bat an eyelid. If you're gifting a basket that's worth $5,000, I guess somebody might be sort of wondering why they're getting that gift. It sounds more like a backhander than a gift. But if it's reasonable and it is a gift, yes, it's an allowable deduction.
Kind of promote what I'm doing.
Yeah, exactly. And that is a reasonable business expense. Lots of I work for a guy who is a food wholesaler. And he has a brand of German chocolates. And, he did a promotion where he sent some of these chocolates out to a whole bunch of IGA stores so that the owners could taste the chocolates. And that is a genuine marketing expense.
In your expenses, do you just put like the cost value? Like, so I give away a gift box. Do I just put the cost value in my expenses?
Yeah, look, I would. But if you're wanting to keep track of how much is giving away, you might want to maybe separate it and put it as marketing. So take the cost out of. So you've originally put the cost into that first line, that product, supplies, and stock. Then you've made up some baskets, and they've become a marketing cost. I would take the value out of products and put it into marketing.
Okay.
So put a negative amount through as products and put a positive amount through as marketing. And we do talk about that later when we talk about correcting mistakes. So we'll do an example of that. They both negate one another within the system. There is actually no cash movement. But if that helps you analyse your business better, then that's what I would do.
Sorry, I just didn't quite fully get. So the actual stock that I am giving away, I'm putting that under.
Say I'm marketing. Find a mark. There is a marketing category. Look, you can put a little note next to that if you want to. See, there's a client gift one, incentives and samples. So there's one called that. That's probably the one you need to use.
Yeah. Okay. Yes. Perfect.
And just write a little note in it. Gift boxes, and you can write a little note if you want to take the value. Just write take the value out of products and put it into here. So you remember that you've got to do that entry.
Right, okay. Because what I normally do is I put it in my sales column because I'm paying for it. So what I normally do is I will gift it, but I'll put the money back into my account. Is that what I should be doing?
Oh, no, you don't have to pay. You don't have to pay yourself for it, no. Because that you're just going to pay tax. You're just going to pay tax on that income. So that you lose the benefit of having a tax deduction by doing that, because you'll have income of $100, an expense of $100, and it's zero, but you don't want to do that. You've actually paid for that, so you need the extra expense. So no, you don't need to put the income through because you haven't got any income.
It's okay to put it under client gifts, incentives.
Definitely, most definitely. Yep.
And that wouldn't go under income, that goes under expenses.
It's an expense, yeah, an expense your business.
Oh, I've been putting it under income and I've been paying myself.
Look, if you're in a situation where you were in partnership with someone else and your agreement was you can give away any stock you like, but you've got to cover the cost for it, then you may put the amount back as income if that's the the arrangement you have with a business partner. One, you might be giving away a lot as as gifts to your family for birthdays and Christmas and all the rest of it. That wouldn't be a reasonable business expense. So you would be expected to reimburse the business in that case. But if it's a genuine cost for getting you income, which marketing is, then it's just a business expense.
Right, okay. Oh, that's something I've learned today that has always kind of like...
That's what we like to hear.
Oh, thank you very much. Perfect.
Okay, so I'm throwing this one in here because I do get the people that say to me, I don't know how to calculate GST, or they just actually calculate it wrong. So we're aiming for the lowest level here, so we're going to do this. So your product or service is $165. Add 10%, you get the price that you should be invoicing for. If you only have it the other way round and you know the end price and you want to know how much GST was included in it, you divide the amount by 11, because your $181.50 is actually 110% of the value of the good. So the rule is, and if you don't even understand the calculation, the rule is if you want to find out what the GST component was, then after GST or an inclusive of GST price, it's just divided by 11. Trust me if you can't wrap your head around it. If you're not a numbers person, just trust me. It works every time.
I trust you. I definitely trust you.
When we are entering receipts into our system, if you're registered for GST, of course you need to separate the GST, and not all invoices have 100% GST on it. This example on the screen at the moment shows where fuel has been purchased at the petrol station, but so has a phone card. So a Virgin Recharge phone card was bought as well. It doesn't have GST on it. So the way they identify it so that you know which ones have got GST on it, they have a little percentage sign here, and they tell you down the bottom that all taxable items have got a little percentage next to them. So we know on this receipt that only the fuel has got GST on it. And if you divide $35.92 divided by 11, I'm sure you will come up with $3.27. If somebody wants to check me, they can, but I'm sure that will be correct. Another way you might see it is each line item might have something on it. This is a receipt from a lawyer, and there were some items on there that didn't have GST on it. It was probably a government charge. Excuse me. So once again, if you divide the bottom figure, you'll find that 1,190 divided by 11 does not equal that GST figure. So it's just a double check that it's only been charged on the 900. Gee, my voice is going croaky. Let's just save it there. Another one or two examples, and I think there's a space to jot this down into your workbook. Two examples that we probably all come across where the amount of GST isn't 1/11 of the total will be car registration and insurances. Insurances nearly always will have stamp duty applied to them, and stamp duty does not have GST added to it because stamp duty is a tax, so you don't tax a tax. So it doesn't show on your insurance policy that it doesn't have GST. It'll just show it as a separate figure. It'll show it as stamp duty. So if you once again divide 82.50, you'll find that it isn't $7. And we will talk about how you enter this a bit later on. There we go. The other case where it may not show is if the supplier is actually not registered for GST. So you might have two contractors working for you. One contractor is registered for GST, so you're going to get charged GST on there. The other one may not be registered. I think it's really good if you're not registered for GST to actually write that on your invoice, and just saves the confusion for people when they
I do that.
Yeah, it just saves them that phone call or that query. Okay, so if it doesn't indicate on the receipt, so this one up here for some batteries, doesn't indicate whether there's GST included in that or not. Because it's under $75, they're allowed to do this. But if you want to check, you can check by looking up their ABN. And there is a website, Australian government website, that is called Abn Lookup. So you just Google Abn Lookup, it'll show up. Mine just comes up on my feed automatically because I use it so often. And it will tell you that on that website down here, whether that person is registered for GST or not. If they're not registered for GST and they've charged you GST, don't pay it because they're not legally able to charge you GST. Sometimes it's just a genuine mistake, and this goes from lawyers down to tradies. Sorry, I shouldn't say down to, lawyers or tradies. Sometimes they are confused and things have changed in their situation and they're charging GST and they shouldn't be charging GST and they're just not aware of it. So in those cases, I just send them a little reminder saying, you aren't actually registered for GST, can you reissue me an invoice? Most times they go back to their accountant and they say, you told me I was registered for GST, and they backdate the registration, and things like that. So it's not always a scam to rip you off. But having said that, there are a lot of people that do put a dodgy ABN on there, charge a GST, and it's not theirs and they shouldn't be charging GST. You are legally responsible for checking ABNs to see if the person can charge it or not. That's part of GST law. You ask for a new invoice. Right, so where are we at? Oh, not tracking too bad for time. So how do we enter expenses correctly? Now, luckily for me, I do have slides on this because we don't seem to be able to project my screen so I can show you. I actually do have a great gizmo called Mirror, and I can actually mirror my phone onto my screen to show people how to do this, but it doesn't want to work when we're doing a PowerPoint. So on the app within Solo Accounts, it's pretty simple. If you want to actually open up the app, we can maybe enter a receipt while we're talking through this. I have given you just a one-pager of these instructions, so you probably don't need to write any of this down because it's on that lovely, just as a screenshot there of the app. Sorry, I'd ask Lynn what page we're up to, but she's probably not onto it.
I'm here. We're
so page 18 of your workbook. It's just a full screenshot with what I'm going to tell you down the side. We would go in and go add record. It's pretty simple. It's not complex. It's not lots of choices. It's just pretty straightforward entering. So we're going to add a record. It will come up with so at the top of this screen, I'll just get back. If you happen to put a record in and you don't put enough information in it, the system knows. So the basic information it needs is a category and an amount of money, and then it can do the reports that it needs. If you try to enter something, so if you just put a photo in and you don't add a category and you don't add an amount of money, it'll just keep it as an incomplete record, and it tracks them for you so that it will remind you here, you either got busy and you didn't finish it, or you're a dill or something like that, but you need to complete these records. So we're going to add a record. You ask to take a photo. You can skip taking a photo, but in that case you have to fill in all of the categories, so it forces you to give it a bit more information. When you're taking a photo, You need to take a picture of the whole receipt, not just that little bit in the middle, because you need to have the ABN and you need to have the GST information on it and a date. So this first part here, it's got the GST, but it doesn't have who the actual supplier was and it doesn't have a date on it. So it might look like it's quite a small picture in your camera, but remember, you can always expand pictures, you know, on a computer. So don't get too caught up with the size of it when you actually take the photo, because you can always expand them. So make sure you include the date particularly on it. If you buy something with your credit card, we don't want the little gizmo that comes out of the point of sale machine as such. You actually want the invoice, because that's got what you've bought and the dates and all the rest of it. So we really need a picture of the invoice, not the little bit that comes out of the machine.
Can I ask a question?
You can.
Is it the date of the invoice that you put in, or is it the date that you've taken the photo?
We're just about to cover that.
Oh, sorry.
No worries. You can take, if you've got a document that's got multiple pages, just keep going back and adding a photo. So add a photo until you get all of the pages taken. You can go in and delete the photo, or just check it if you want by clicking on it. The date is always the date that it's paid. So solo accounts is a cash-based system, not an accrual system. So bigger companies will do their tax and their BAS and keep records on accruals basis. They will always record their information on the date on the invoice, regardless of whether it's been paid or not. In a cash-based system, which I would assume that most of you would be on, you use the date that you've paid it for. So if the invoice on your Telstra bill is the 28th of December, but you pay it on the 6th of January, you need to put the 6th of January. And we do talk about this a bit later, but that date is important because if you're doing a quarterly BAS, it will make a difference as to which quarter it goes in. If you have an invoice that's on, say, the 28th of June and you pay for it on the 4th of July, it will fall into a different financial year. So it's always the date that it's paid. In solo accounts, you can put it in when you receive it, and it will go in there and you can mark it as unpaid. So you would just change this category here. So we go in, it defaults to expense, but you can change that to income or other, and we'll talk about other later. If it's unpaid, you can click the unpaid button, pick your category. The system then will know whether it has GST on it or not as a general rule. So if you pick telephone, you put $110 in the amount, it will automatically calculate 1/11 of that and put in $10. This is fine if it's always a circumstance where there's GST. So if you bought a phone card and you wanted to allocate it to telephone, you'd have to just click this to no, because there is no GST included, or you can put 0 in that box. But as a general rule, you just put the invoice in and it'll calculate the GST for you and you won't have to do anything else. I make it a rule to always check that it's calculated correctly. And the reason for that is if I accidentally put $1,110 in here, because I was getting a bit finger happy, my GST amount would be then wrong. It would be $100, or if that's right, my maths could be wrong, probably is. It would be $110 or something. So it just gives you that double check that you've entered this figure correctly, the amount figure correctly. So it's just a self-checking mechanism. You can add more than one category. So if you've bought, like I say, the phone card and fuel on the one receipt, you can go and add them. So just keep adding categories. You can add as many as you like, and it will do the individual GST on each one. So you actually just get a version of this several times. If you've got we've shut down again. They're apologising for the inconvenience. That's nice of them.
Might be your processing power.
Oh,
Have you got lots of tabs open?
No, I haven't today, which is not like me. It's just internet round. Oh, it shouldn't be the internet. It might be something to do with the internet because it's been incredibly slow now that everybody is working at home.
Well,
Yeah.
I can't even get into the kitchen because Simon set himself up there. The CEO is in the kitchen.
CEO is in
I
the
can't get
kitchen.
to the kettle.
Right, so we're going slideshow, start from here.
This is the real world, isn't it?
Right, now am I sharing my screen or not?
No, not yet.
Okay, now I have to get the share screen button to show up for me. Hang on.
I used to love working from home.
Share, so share. Oh, hang on, this is why we have to do it. Share.
Yay.
We've got it.
Yep. So now we've got to do it as a slideshow. Yes. Open current slide. We right?
Yep.
Cool. Yeah, so if you haven't got the GST version of solo accounts, you're never going to get these two things here because you don't have to track GST. So your screen won't ever include those. Oh, hang on, let's just get to the end of this. It gives you this receipt amount here, just in case you've got multiple categories. It's just a double check that you've entered them correctly. The next two, I don't need that one. The customer and supplier, you can write anything you like in there, but if you want to search later on a particular customer or supplier, you need to have the name in there. Same as in the notes section, this is really just what's going to be useful for you later on. So if you want to track how you've spent stuff, if you want to say, oh, I want to be able to extract everything I've paid on my credit card, you might write Visa in there. I don't know, what are other things you might, if you have a job number, if you track things on jobs, you might want to put a job number in there. And the reason you do it is just within solo accounts, you can extract records that have whatever's written in here. So if I wrote Visa in here, within solo accounts, I can go in and go, okay, show me all of the receipts that have got Visa in the notes section. So it's just whatever's useful to you. If you don't think you're ever going to want to search on any of those things, then don't put anything there. If you've got no picture, you have to fill in every box. So I just put a full stop in this box because you need to fill in the box. Hit submit, and you'll go to this screen, and the entry that you've just put in will be highlighted red. Once that's been uploaded to the cloud, that will turn into grey. So if you end up having several of these, it means they're not uploading. So it's an indicator that you maybe need to look and see, check the connection between the app and the cloud. Because at that stage, they're only on your phone, they're not in the cloud. So that's just a way of indicating that something's not quite right. In a worst case scenario, you would have to delete the app and upload it again. And in that case, all the red ones would be gone. But you can also enter things into the app, sort of like in aeroplane mode. So the app will work independent of the internet. So say if you're on an aeroplane and you want to enter all your receipts, you can. But at that point in time, they would be all red. And when you connect with the internet again, they would all upload. But if you're not in that scenario, and one, it might be a little bit slow because you're really fast at data entry, but it could be that everybody's using the internet. But if you end up with more than half a dozen and they're not uploading, I'd stop and find out why.
Sorry, Donna, if you do end up like with the solo package or software, and you have any like along the track, if you have any questions or queries, can you make contact, or is there somebody?
My phone number's on the website. It's
right, okay.
Yep, email, phone. Yes, you get a direct access to me. So
and I love that.
That's what you need, isn't it? You come across different situations and then you put it in the too hard basket and you're stuck again.
Yeah. And I get that. And I get, I've had people ring me and go, the report's given me the whole year and I only want a month. And you go, okay, well, just, are you looking at your screen now? And they go, yes. And I go, at the top of the screen, at the top right-hand corner, there are some boxes. One is date from and date to. If you put the date in there and hit the submit button, you'll just get a month. They go, oh, you're so clever. And you go, yeah, let's call it that. But then there's other cases where, and I don't know if this applies to you, but I had a person who was importing goods because she made jewellery and she was importing goods, and, you know, she got charged GST through customs and didn't know how to put it through. And she just sent me an email and I said, look, this is the entry you have to do. So for me, it's day-to-day stuff, and I can answer that question really quickly rather than you sitting there stewing on it going, I just don't know how to do this. Happy to answer those sorts of questions, because for me, it's really easy, and it can just save you a lot of time and stress. So, yep, all part of the service.
And you get a smile at the end of the phone.
You do. Well, I'm always getting into trouble for too much laughing in the office. So,
and not a recorded message.
Yeah, really.
Watch this space though. One day when we have thousands of users, there might not be Donna necessarily on the head.
Yeah, you can always request me, I guess.
Only for business women members.
Yeah, no such thing as a silly question, is really what I need to say. So yeah, happy to help you out.
Oh, that's very reassuring.
There will be some cases, like we said, your source document might be your bank statement, and things like bank charges and transaction fees. You won't have got an invoice for those. So you can enter those directly from your bank statement. You don't have to take a picture of your bank statement every single time. So if you've got lots of them, you can just, there is a section within solo accounts, and this is supposed to be part of my tour that I was going to take you on, that's called the other. So we store information in 3 cabinets: income cabinet, an expense cabinet, and an other cabinet. And other just lets you store any other documents, so bank statements, insurance documents. When you register your business, you want to put those documents somewhere, a copy of your BAS. All of those things go in the other cabinet, and you pretty much upload them the same way as you would any other document. You can either take a picture, or on the website you can add a PDF, and they're all just stored in there as well. So all of your business documentation can be stored in the one place. So if you want to take a picture of your bank statement for the month and put it in there, by all means do. And then on each of these records, if you've got to enter half a dozen things from your bank statement, you can just refer to your bank statement, or it's pretty obvious it's from your bank statement. So don't get too caught up on having an image on absolutely every record.
How did you get to those cabinet things?
It's the same way. So when you, so on the website, it's just cabinets, and it'll come up with another choice of the 3 cabinets. On your phone, when you're data entering, when we go back to, this screen here, if it's something else, that drop down box there will be income, expense, and other. That's the 3 options you'll get when you click on that button. So if it's something else, you just click on that and you'll get that option. All of these others, when it's other, all of this stuff here disappears because you don't have a cost, because it's just a filing mechanism.
Okay.
If we can get the website up at some stage, we will do that. But otherwise, in a minute, when I get you to enter some things, what I'd like you to do is actually just do some entries on your phone. And if you haven't downloaded, if you haven't signed up for one, I can give you the link to just a test account just to play with. Have a look, enter it on your phone, and then go to the website and see where it ends up, because then it makes a lot more sense. If you're just doing lots of data entry on your phone, you kind of don't get that correlation of where it's ending up and what it's doing. So that's what you should do in a couple of minutes when we just break to enter some. So in the same regard, you may have income that you've received, so interest you've received, which would go in as income from your bank statement, or you might have a direct deposit that comes out, direct debit that comes out every month for something you've financed, and you're not going to have an invoice every month for that, but you probably need to record the expense. Where do we go after this? Okay, somebody did ask me this question the other day. Do I have to enter every single receipt or every single entry? Sorry, I'll just jump over my pages here. And no, you don't. You make this decision yourself. So if you had 30 parking receipts in a month and you didn't want to enter every one of them separately, you could lay them out and take a picture of the whole 30 at once, add them all up and enter them as one entry. What you lose by doing that is you're not going to be able to tick them off against a bank statement. If you're that kind of person and you like to do the checking thing, you can't do that if you enter as a mass amount. Also, say you had you deal through PayPal. And you get a receipt, a printout from them, you may want to just do the total of what's on the bottom of the printout rather than every single entry. So this would apply for sales and expenses, because usually through PayPal you may be selling something, but there'll be a charge, a merchant fee against all of those. So you can, if you can substantiate the whole big figure just with a printout, then by all means just enter it as a lump sum. And that might save you a lot of time, but it's totally up to you how you prefer to do it. And it can save you a lot of time if you don't do them individually. So there's a PayPal one, which is, actually subscriptions to solo accounts. The thing you have to keep in mind is one figure may have fees deducted and the other one doesn't. So within PayPal, the gross figure here includes GST, and the fee doesn't, because it's an overseas one, so there is no GST on that fee there. So if you enter just a bulk figure, just be wary of what's got GST and what doesn't. And just on things like PayPal and external payment systems, just be careful that you don't enter things twice. So sometimes you'll get the amount in PayPal and you enter it, and then you've transferred the money over to your bank account and then you enter it. You only have to enter it once. So just don't double up on those sort of transfers. They're just a transfer, you didn't sell it twice. And as I said, you may not be collecting information that you need to analyse your spending if you're doing bulk entries. Okay, so now we're just going to have a bit of a break and just go and have a toilet stop or get a drink or whatever. But I'd love you to come back and start entering some of your receipts, just so that you get a feel for what the system does. And also, as I said, go in and have a look at the reports. And you can see that, while you're doing your data entry, you're also doing your filing because you're taking pictures. The system sorts and collates and does the adding. So it doesn't matter what order you put your receipts in, the system will sort them out into date order, into category order. If they need to add up a pile, it'll do the adding for you. It does sort the GST out, so your BAS will be ready to go. And it's secured in the cloud. So please just take some time to just have a bit of a play. I don't know, we right? Okay, so the next area that people get a little confused over or don't quite know where they stand is what you can claim when you work from home, and how you categorize yourself when you work from home. So we'll cover this. So you can claim things like your phone, your computer, your car usage, your home workspace, and your office equipment. But you can only claim the business portion of it. You have to keep records of how you calculated your business portion, and once again, you can't claim anything that you've been reimbursed for. So just to look at your phone bill as one, the ATO suggests the way to do this is to print your bill once a year. Highlight the work-related calls. Make a quick note on it as to whether they're, you know, suppliers or contractors or customers, and then calculate how much of the bill is actually business percentage. This only needs to be done, well, they say once a year. I don't know that anybody ever does this ever, but if the tax department audited you, they would need to see how you came to that percentage, and that's their recommended method. If you don't have an itemised bill, you should just maybe keep a diary based on 4 weeks records, and you can proportion that same percentage, whether it's a mobile phone or a landline phone. I would keep your phone and internet separate, because they might be quite different percentages. So same with the internet, keep that in a diary. So let's just do an example of this. If your phone plan was $49 a month and you did 300 calls in a 3-week period, we worked out that 80% of those were work-related. You only work 10 months of the year, not 12 months of the year. The tax department does expect you to take holidays, so you really shouldn't be using 12 as your dividing figure, because they know that you would take at least 4 weeks holiday a year. So the monthly calculation of this is $40 a month. We know we only use 80% for business, so it's $39.20 a month we can claim. If we do it in a year, it's $392. So kind of basic maths, but you really should have a record of it. I think in your workbook, there's a space for you to work out what yours would be if you want to keep it as an ongoing record. Nothing tricky about that, really.
My plan doesn't give me a printout of the calls and stuff. I've got unlimited calls, and
then estimate it. Like, track the number of calls you do in a month. Like, put a tally if it's a business call, tally if it's a personal call. For me, I have 2 phones. I've got a business phone and a personal phone. So 100% of my business phone is just business. So I don't have to do this. But yeah, just do it for a month, and, you know, I'm reluctant to say close enough is good enough, because that's really something the tax department doesn't want to hear. But yeah, really, it's your phone bill, and we're talking $300. We're not talking.
Mine wouldn't even be that.
Yeah. So just keep it in perspective.
Yeah.
So when you work from home or have a home-based business, it can be categorized 3 different ways. So you can work at home but not have an office. So you might work from the kitchen table. You can work from home and you may have a designated office that you use as your home office, or you could actually run a business from your home. And there are very different things that you can claim depending on which one you classify yourself as. So this is the first one. You're working from home, but you have no office. You've just got a space in the living room. The other one is you've overtaken a bedroom and you've turned it into your home office. So it's just a very separate space from the rest of your house. Or it may be that you've got an area, it may be a converted garage, or it may be a room at the front of your house that you've converted into a business. So this may be, say you're a hairdresser and you run a hairdressing salon from home, or Sue, I don't know if this is the situation you have a salon at your home, but you are then running, your home is a place of business. Now, we'll run through what the distinction between them are in a minute, but the 2 different types of costs that you have are running costs. So these are electricity and those sorts of things. The other ones are occupancy costs. So they are things like rent and rates and all of those things that you have as owning your home. Now, you might want to fill this in on your chart. So the information that I am giving you, I've given you a printout of the ATO's little brochure on this, but just so that you make it clear, you might want to jot these down into the little box that's on page 20 in your workbook. So if you are at home, or all of them, you can claim the cost of utilities, so your gas and electricity. All of them, you can claim your telephone use. all of them you can claim desk, computer equipment and all the rest of it. You can only claim wear and tear on curtains and carpets and those sorts of things if you have a separate space. So if you're working in the lounge room, no, you can't claim the wear and tear on the carpet from the chair rolling over the top of it. But if you've got a separate office that's only used as your home office, you can claim things like the decline in the value or depreciation of fixtures and fittings, same as if you run your business from home. But the room has to be just used for your office. You can't have multiple uses of that separate room. If you have your house as a place of business, you run a business from home, you can also claim a portion of your rent if you rent, or if you don't, you can claim a portion of your mortgage interest payments, your insurance and your rates. But there comes a catch with that. And we'll talk about that in a minute. So how do you calculate it? You do some measurements of the room and you find out, so it might be 10% of your house, and that's how you work it out. If you don't have a dedicated area, you can just keep track of how many hours that you spend in that area, and you can use the calculation of 52 cents per hour of the time you use that area. So if you're sitting at a desk and you want to claim some usage of that space, the best way is to keep track of the time and just claim 52 cents in the hour. Sometimes when you do this, you work out it's going to be $100 a year and you think, I can't be bothered for $100 a year. But as I keep saying, you know, the more tax deductible expenses you have, the less tax you pay. So that choice is up to you. Oops, hang on. If you have a dedicated area, use the size of the floor area. So if it's 10% of your house, you can claim 10% of the expenses. So if you, as I said, if you're running a business from home, you can claim the interest on your mortgage. And the way that you do this is a test that the tax department give you, is that it's a clearly identifiable place in your business. So if I came to your house, I could easily tell that you are running a business from there. It doesn't look like a bedroom. It looks like a place of business. It's probably can't be used for domestic purposes because it is set up as your business. It's only used exclusively or pretty much most of the time for business, and visitors come to this place of business. So you probably have a sign out the front of your house and clients come and visit you at your business. Now, I questioned my situation with working from home with a tax department representative, and I said, well, I have an online business, so I can actually sit in my home office and I can run my business from my home because it's an online business. And I said, so does that not make me running a business from home? And the question was, do clients visit you at your place and do you have a sign out the front? And I went, no. And she said, well, then you're not running a business from home. You have a home office. So you need to understand the distinction so that you can decide what you can claim. The other thing that is relevant for this is that if you are working from home and you're claiming you're running a business from home, when you go to sell your house, you will be up for capital gains tax on the portion of your house that you were using for business. So if you're using your garage and it's 10% of part of your house, when you sell your house, 10% of the capital growth won't be exempt because you're in a residence. So it's important to understand that if you're running a business from home, because you don't want to get caught for this capital gains tax when you weren't aware of it. The upside to that, so you need to be aware that that's there. You'll also be aware that there are small business concessions that may come in, and so it negates it a bit. But my point here is just, if you're in that situation, get some good professional advice, because you don't want to have surprises 10 years down the track and realise that you've had this big expense and you weren't expecting it. The upside of it is that if you are using a house for business, You can claim the interest that you're paying on that part of your mortgage as a tax deduction. If you're not paying any interest, you can claim it anyway, which makes no sense to me whatsoever. But the rule is you are allowed, and that's why they call it an interest deductibility test. You are allowed to claim some of that interest. So we won't go into that any further. My point is if you're in that situation, you own your home. It doesn't matter if you rent, because your capital gains tax won't apply. But if you rent your house and you're running a business from your home, get some advice now so that you understand where you will stand if you sell your house. No questions there. Like, it's just an awareness I want you to have of that situation. All good with that one? Okay, what's the best way to claim motor vehicle expenses? Because generally they are not 100% deductible when you're using them if you've got a home business. So can I claim trips for business purposes from my home if I have a home-based business? So the general rule is you can't claim an expense to travel to work. But if your work is from your home, yes, you can claim from your home. So you might be visiting clients, you might be going to pick up supplies, do some banking. I don't know if anybody does banking anymore or whatever. Or, you might be going to see your accountant about business matters. All of that can be claimed as a business expense from your home because you work from home. So just the differentiation between if you work somewhere away from home, you can't claim that travel, but you can claim it from home. The way you claim, and this is all on the help sheet that I've included from the tax department, so I'm just glossing over it just so that we've covered it. The way you claim depends on your business structure. So if you're a sole trader, you claim things differently than if you're a proprietary limited company. So you have to understand the distinction there. It also depends on the type of vehicle. So if it's a car or if it's maybe a van, will change the way you claim things. When you choose which way you want to calculate this, you can use different methods for different cars. You can change from year to year, and you can choose the one that gives you the best result. So have a look at the way you can on that sheet, and you can jump around and just get yourself the biggest tax deduction. So sole traders and partners can claim in cents per kilometre or the log method. Companies and trusts have to use the actual costs, but if you use the car for private purposes, you can track that. Sorry if I'm going through this quite quickly, but we do want to kind of not be hanging in here too long afterwards. So is your vehicle a car? Well, a motorcycle isn't a car, but anything that's less than 1 tonne is a car, and if it carries fewer than 9 passengers, it's a car. Otherwise it's not. And then you would use a different method. So not the cents per kilometre, but you have to keep all of your receipts. You can claim, so the records you need to keep: loan documents, lease documents, all your tax invoices, registration papers, and how you got to that percentage of whatever you're claiming. You need your logbook, and you need, if you claim the cents per kilometre, keep a diary showing how you got your workings. So if you're using, several different cars, soon maybe the best way for you to do it would to diarise every time you use a car and just claim the cents per kilometre method. So if you're jumping from different cars, keep your diary for 12 weeks to keep track of what you're claiming. So in your workbook, you've got these categories written down. What I'd like you to do, just to show you that keeping all of your records and making this one calculation can make a huge difference to the amount you can claim for your tax deduction. So I know people, their accountant just says, yeah, let's claim the 5,000 kilometres at 68 cents. But it can make a huge difference if you actually keep the receipts and claim what you actually pay. So if you just want to keep a couple of minutes to maybe estimate what you might spend over a year on all of these things. So your fuel, if you're spending $50 a week, it's $50 probably by 48 weeks. So you've got your holidays thrown in there. What you think you'd pay repairs and maintenance. Insurance can be maybe $800 a year. Registration could be $800 a year. If you've borrowed your car, you can pay the interest or the lease payments. And if you've got a car that's worth quite a lot, depreciation, a fifth of the value of your car over 1 year can be quite a lot of money. That's if we're not using the immediate deduction. So I don't know if you've quickly done your figures. Anybody want to throw a figure at me at how much it's cost them to run their car for a year?
Donna, if you use the logbook method, we're in very unusual times at the moment, and if you use the logbook method, then it's calculated out for the whole year, isn't it? So you might be going nowhere at the moment, which I am not, but normally I would use my car a lot for my business. So isn't that going to be a detriment?
Yeah, and you can use it the other way. Well, you can do it when you're in a really busy period, which is not what you're supposed to do. It's supposed to be representative of standard 12 weeks.
Because we're all standard and normal, aren't we?
Yeah, I think the tax department's not going to be too worried about it at the moment. I mean, most people probably should have their logbook, and their logbook is based on what they would normally do. Tax department is being extremely understanding about everything at the moment, so I don't think I'd be too worried about it. But yeah, don't start your logbook in this 3 months.
No, I haven't kept a logbook for years, even though I should have, but I haven't.
Well, I think the next slide might tell us what we're supposed to do, but I didn't actually include it in the workbook, which was a bit silly. But a logbook lasts for 5 years. If your circumstances don't change, you can use the same logbook for 5 years. So
cool.
Yeah. So anybody done the calculation, or we're just kind of all gone into I don't care mode?
Yeah, and I have a little piece. I haven't added anything to it.
Okay, so my nephew did this. He was working as a real estate agent, but he was going out checking rental properties, and he had to use his own car. And he thought it was really cool that he'd started working, and he went out and borrowed money to buy a car. So he had a reasonably flash car. He went off to ITP in the middle of middle of the shopping centre, and he said, "Right, I want to do my tax return." And the guy said, "Here's my printouts," because I told him to use solo accounts. He said, "Here are my printouts. This is what it's cost me." And the guy said, "Oh, I don't need that." He said, "We'll just claim 5,000 kilometres at 68 cents. And so he thought, "Oh no, well, that's not what Auntie Donna told me to do. She told me to use these printouts." And the end result of that story was, instead of him being able to claim $3,000 odd of tax deduction, he could claim $12,000 as the use of his car. So there was a huge difference between what it actually cost him and what just using that, I like to call it the lazy calculation, was going to give him. So here, of course, you don't include these parts. But for an example, logbook showed 11,000 kilometres, 6,600 were business. So that gives us 60% business use. Expenses for the year, including depreciation, were $9,000. So what I can claim is $5,400. If I had used 5,000 kilometres times 68 cents, because you can't claim any more than 5,000 kilometres, that's the upper limit. I would have only been able to claim $3,400. So there's another $2,000 as a tax deductible expense because I've gone to the trouble of keeping all of my records and making that calculation. So my point here is maybe do that quick calculation. If you're not going to be any better off and you can't be bothered keeping all of those records, or you've got a really old car and you're not going to get much depreciation on it, then maybe you should use the diary and get your cents per kilometre. But it's well and truly worth doing the exercise because it can make a huge difference the amount you can claim. Yes, you need to keep a logbook. It can be electronic, it can be a paper one. You have to keep it for 12 weeks. It's representative of your normal year, as we were just talking about. 12 weeks can go over across 2 income years. So if you start your logbook in May or June, you can carry it across to the next financial year. It's valid for 5 years, but you should keep track of an odometer reading each year, just so they know you're upfront and honest. If your circumstances change, you should keep a new logbook And I think that also includes if you buy a new car, but that doesn't really make sense to me. But yeah, so if you, the best way I think of this one is if your business was quite slow and you've kept your logbook for 12 weeks and then business really picks up and you're doing lots more travel, I would do a new logbook to, show that you're normally using your car far more than you were before, excluding present circumstances. There's just a sample of a logbook, and that's in your workbook, so we won't go over that. Right, how do I enter things that are part business use? So if you are using double entry bookkeeping systems, so your MyOb situation, or any other double entry bookkeeping system, you have to enter this total amount on your receipt, otherwise you won't balance. Your double entry, they've got to balance. Your two entries have to balance. Your bank balance has to balance out to your receipts. Or you might be a person who likes to keep track of the personal portion. So there is a category in Solo where you can add the personal portion if you want to, but that's just totally up to you. It's not relevant because it doesn't go on a tax return. The personal part doesn't go on a tax return, so you don't need to keep track of it, but it's a personal thing or your system. So on this receipt here, we've bought some firewood while we were at the petrol station. So how we would enter that is we'd go in and we would put the fuel portion. So your fuel and oil can go in as a category. And we're going to claim, I'm trying to point at my screen with my finger. We would claim the GST portion for our BAS. Then we would add another category and we'd go, okay, we want to add the other part to personal drawings, but we can't claim any GST on the personal portion. So that will come up as 0, and the system automatically makes it 0 because it knows that you can't claim GST BAS back on your personal expenses. You can check that you've got your total amount correct here on your receipt so that you know you've entered it correctly. That's your 0 GST, and there's your amount, so you do it equal. If you want to use just single entry method, which is what you would do in a single entry system like Solo, because you don't need to record the personal part, you would just enter the part that is the fuel and the oil and don't enter the amount that's personal. You're not going to equal your receipt, but we know why. We know why we're not equaling it, so it's fine. You don't need to equal it. That's fine. Within Solo accounts, any questions about that? That all makes sense. So within Solo accounts, there is a way that you can get the system to calculate the business portion of it only, and on the main menu, it's just the claimable percentage claimable button, and you go in there and you click on the category. So if it was your car, you click on it, you put in the date range, and it may change, like we've talked about. Your percentage that you can claim might go up, so you can actually change it within date ranges there. It gives you that option. I think you can put up to 10 different date ranges. So put in the date range, tell it how much you can claim, and it will do it for you. So it will calculate 50% of the GST and 50% of the expense, because you can only claim the same portion of your GST. So you don't have to do that claim percentage yourself. Once you've done the calculation, the system will calculate it for you. And this is what it would look like on a printout. It'll just show you that, it gives you that indicator there that you claim 70%, just so that it's obvious. And if you did this calculation here of your 79% times 70%, it's $50.40. If you divide $50.40 by 11, you end up with $4.58 GST. That might, your amount minus your GST. So that's just double checking that the system worked. You don't have to do this. That was just, if you're curious to see if I'm right, that's the calculation done for you. You can, if you want, record everything as 100%, and at the end of the year, just make an adjustment. You're allowed to do that. So, if you've worked it out at the beginning of the year, that's fine. Or you're carrying over from last year and you know it's 70%, you can calculate it. But if you don't and you only do it once a year, you are allowed to make an adjustment at the end of the year. If you're good with numbers and you're happy to pay back any GST you've overclaimed, that's fine. But I just kind of like to get it right in the first place. So that's what to do. So any questions on how you enter that, or anything to do with business and personal expenses and part business expenses, or all okay? We're still awake? We were supposed to be more interactive, but we're kind of running out of time. So I'm just trying to gloss over it, and you can kind of go over it again in your own time. We do make mistakes, so how do we correct them, and what are we looking for? What sort of mistakes do we make? You can have incorrect figures. You've put it in as $98 instead of $89. You've said it's got GST and it doesn't have GST. You've put it in twice because you got interrupted halfway through what you were doing. Or you may have put it in the wrong category and gone, oh, silly me, I need to fix that. Or the date was wrong. You've put it in there as the date of the invoice and you want to make it the date it was paid. So those are the sorts of things that people generally get wrong. Most of these are quite easy to pick up. If you look at, run your eye down a report, you can usually pick these up pretty easily. So for example, here, if we look at this, I'm looking at this report down here and I've gone, gee, look, my interest for January was identical to my interest in February. Gee, that's probably highly unlikely. To me, that is a trigger to go and check. So if we have a check, we've gone here and we've gone, oh, look, I've actually put the wrong amount in, so I need to correct that. Another one, I've looked in here and I've gone, oh, gee, their bank fees are January, February, March have gone into bank fees, and April, May and June have gone into merchant fees. And well, that's not right. They weren't merchant fees, they were bank fees. Now, the point that is important here to notice is that merchant fees have GST and bank fees don't. So you've actually got this wrong on two accounts. It's the wrong category, but what's important is that the GST is going to be wrong. So that needs to be fixed. And here, this is kind of pretty obvious. You run your eye down here and you go, oh, gee, both of those amounts there are identical. And gee, look, they're both on the same day. Maybe I better check that one. You may have gone to the post office twice and you may have done it twice, but things like that really jump out at you, and they're the sorts of things that you should be checking. In this case, we just delete one of them. So
okay, can I just ask a question about the merchant fees there?
Yep.
So if my business isn't registered for GST, I pay the bank charges as normal because there's no GST. But when it comes to merchant fees, how do I record those in my accounting then?
So you will record them as $10, but in your system it won't separate GST for you. So when you claim GST, when you register for GST, you claim the GST back on a BAS. So your actual expense is less the GST. If you're not registered for GST, your expense is the amount before GST. So your expense on merchant fees is $10.
Yeah.
If you register for GST, your actual expense is only $9.09.
Yeah.
So all systems, if they're set up correctly, doesn't matter if it's solo or mild or anything, if you set the system up correctly, if you're not registered for GST, it will record $10 as the expense. If you are registered for GST, it will split them into two different amounts.
Yeah. Okay, thank you.
Why is the date important? As we said, if you've got to get it into the correct financial year and onto your business activity statement, so that's where your date's really important. So you may need to correct it. Here's an example of how you would do that. So you've got stock on the 28th of December, but we've discovered that it was actually in January. So it's actually, but we don't want to go back and change this because it's actually gone on our BAS. So you don't, anything that you've submitted to the tax department, you don't really want to go back and change those figures, because then that whole BAS situation is wrong, or that income tax return is wrong. So the best way to correct this is, so it's wrong there. So we go into January and we're going to put the negative amount in January. Oh, that's right. This one is a category. Our category is wrong. So the reason, and our category is wrong, so our GST is wrong. So I've got to remember why we've done this here. So we're taking it out of stock to correct that, and then we put it in the right category at the right amount without the GST. So don't go back into previous periods. Correct it in the current period, and you're allowed to do that. Does that make sense? Like I know that's a bit, I don't know if I explained that very clearly.
I've been doing it wrong. If I found something in a previous period, I've gone back to the previous period and fixed it.
Yeah, so, and the reason you do this is when you run your BAS report for the next quarter, all you're going to do is you're going to run it from 1st of January to the 31st of March. So that's not going to take into account that you've gone back and changed something in December. So you need to make the change or the correction in the quarter that you're working on. So
okay, I thought by doing it back there, then it'll sort itself out down in my tax return time.
What I do is I always reconcile the whole year at the end of it. So when you go to do your end of June BAS, and most accountants will do this for you, but if you don't use one, what I do is print out the whole year. So I do a 12-month BAS, then take off what's gone to the tax department. So I work out my whole income, GST on income, GST on expenses, take off what you've sent to the tax department, and what's left should be what goes on your June one. We may need to do a little lesson on that at the end of June, maybe. But yeah, only make corrections in the period that you're working on. This one's a bulk entry. So if we knew all of those merchant fees were in the wrong one, instead of going in and correcting all of them, what we can do is we can just do a bulk entry to get them out of merchant fees and put them into bank charges. And on a report, it would look like this. So our original report had them all in the wrong place. We've just taken them all out as a bulk entry. So we've ended up with 0, and we've put them into, we'll put them into the right one as a bulk amount. So when I said before, if you're going to be wrong, be consistently wrong, this is the quickest way to fix consistently wrong mistakes. So instead of having to go and change maybe 100 entries, you can fix it with 1 entry. We okay with that one? Within solo accounts, there is a place where you can actually set the end of a period date so that it warns you if you're going to change figures in a previous period. So that's just in the settings area. You go in and you put the date, and if you happen to put a receipt in that is in that period or before that period, it'll just come up with a little warning saying, you're trying to put this into a period we've already reported to the ATO. Do you really want to do this? It will let you continue if you say, okay, yes, I want to do it, but it just warns you. So it's just a little feature there to help you try and stay on track. So what have we got? A couple of minutes. So reconciling, we've all heard of the terms bank reconciliations or reconciling. Reconciling is proving that a balance is correct. And the way we can, so what it might pick up is amounts that aren't entered, incorrect amounts, amounts you've added to the wrong account, or if customers have made payments due, you can pick them up if you're checking that an amount is right. It can pick up direct debit expenses. It can be as simple as ticking amounts off on a list. So what you might do is you might get a list of your receipts, do a printout of a report from Solo saying these are all the receipts I've entered, and you might want to tick them off against your bank card, your bank statement or your credit card just to see if you've missed any. That is a form of reconciling. You don't have to do that, but it might pick up some errors. Or you might have, on the flip side, you've got a list of invoices that you've sent out to your customers, and you might want to check that everybody's paid them. And that is reconciling. The reason, when you reconciled a bank account, it used to be really important when people paid by check, because you would issue checks and they may not have been banked, or you may have received checks and you may not have banked them. So when you looked at your bank account, it wasn't a true representation of what was in your bank account. So bank reconciliation back then was super, super important. These days, the amount that's in your bank account is generally pretty much representative of where you stand. So it's not necessary to do bank recs from a point of view of knowing how much is in the bank account. It's more done to check that you haven't made any mistakes. But it's totally up to you whether you want to do one or you don't want to do one. And they're not that hard to learn how to do if you want to do them. Be careful of accounting packages that do suggest records for you, and you've just got to press a yes button. So they're very intuitive, and they go, okay, based on the last time you did this entry, here's what I think you'll have to do this time. And you click a yes button. Make sure you look at it, because sometimes intuitive is wrong. So don't just blindly go, oh, isn't this great? I love this, system. It tells me what I have to do. They can be wrong, so just double check. So reconciling in solo, I suggest you do a paid monthly report, because that's in date order. And then if you want to tick them off, you can. So what goes on a BAS, for those of you who are registered, keep in mind your BAS is individual to you. It's got your ABN and it's got an individual document number each quarter. So you can only use your BAS, nobody else's. You report the GST you've collected and what you've paid out on it. Quickly going through these, you submit a BAS 28 days after the quarter's finished. Quarter two, you get an extra month because of the Christmas holidays. And then, but it's written on your activity statement, so you should know when it has to be submitted by. This one here shows the 29th of April, because the 28th of April is a Sunday. So they give you an extra day because they know that that's a business day. If you use a BAS agent or a tax agent, you usually get an extra month's extension on those dates as well, which is kind of handy. You have to make sure you know whether you have to submit on accruals or a cash basis. Most people are cash, so it's on the date you pay and receive your invoices. We talked about that earlier. Sorry, just whizzing through this quite quickly. You can link your MyGov account to the ATO and submit your BAS electronically that way rather than doing paper copies. If you can't pay and your BAS is overdue, and this is probably changes slightly given our current situation, you can do a payment arrangement with the tax department. I suggest if you're really bad with money, put your GST into a separate account. Keep printing the BAS report regularly, and then you'll know what's due. So don't wait till 3 months is up and then go, oh gee, where am I going to find that money from? Regularly generate the BAS report within solo accounts, and then you'll know how you're going. And if you need to, just put pay small amounts rather than big amounts. Don't wait for the whole 3 months to be up. Given the current situation, the tax department are now giving everybody 6 months deferrals if they're really, really stuck for cash flow. So if the business has been really, really adversely affected with COVID-19, tax department will give you an automatic if you ring and apply, will give you an automatic 6 month deferral on any money that you owe. If you do have a BAS agent or a tax agent, they can just do that through their portals. Which is great. We talked about what sort of mistakes we were looking for on a BAS. What you have to submit, the numbers you need are your total sales. If you charge GST, you include GST in that figure. If you have both, some figures, sales that some have GST in them and some don't, then so say you sold water, you don't charge GST on water, whether you're registered for GST and are not registered for GST. It's just one of those things. So if you've got a mixed amount, you just tick the box. You just say you're including GST and they'll figure out that funny little anomaly. You have to put in the GST on your sales, the GST on your expenses. GST reports printed out by accounting software will give you these figures. Solo Accounts does the same thing. If you print the BAS report, it will give you G1, 1A and 1B, and all you have to do is just pop them into your report. You don't have to understand how it's done. If you don't, that's fine. Just trust the system works and add those figures in. Once again, these are things that are not reportable, but that's on that list on about page 19 or something. So if you want to just keep that as a reference, you know what you don't go on, what doesn't go on your BAS. If you've made mistakes, correct them on a later BAS, or if it's quite a large amount of money, you may have to re-lodge another BAS. But unless you come across that situation, we won't go into that at the moment. Usually amounts of money that are maybe more than $4,000 or $5,000, you would have to re-lodge, and you can re-lodge up to 4 years back. Right, so going back to our questions we had at the beginning, I've probably overwhelmed everybody because we've had to go through this this so quickly and so much stuff. But maybe you'd like to revisit these things and just see how you feel about all of this now. Hopefully, once you get your head around it, you're going to feel a bit more like that, not like the ones at the beginning. Love to hear your feedback. I think maybe boot camp is really what it is. It's a lot of information in a very short period of time, but hopefully you can go away and feel a bit more confident with what you're doing. Next boot camp's next Thursday, and it's on some different things. But happy to take any questions if anybody wants to throw them at me.
Thursday the 9th at 10 a.m.
Yes.
So I'm
Thank you, Donna.
sharing the screen now. I've taken yours off, Donna, so I can show everyone what's coming up. Can you guys see that screen?
No.
No.
See the end of the slideshow.
No,
Oh.
no. Oh well. I'll give up on trying to share from here. It's not playing fun.
We haven't had much luck, have we?
Oh no, we got something now.
Okay, so let's. And it's gone again. Oh, I love it. Anyway, we've got loads coming up, and it's all in the BWA calendar. Of course, the second session of this is next Thursday, same time. We'll be that much slicker getting on, and it'll be amazing. So hopefully we can see you. In the meantime, I suggest you all play with this and get on and start getting your BAS statements and everything in, because it's due soon, your BAS. So this is a good time to do it, and then we can really pick Donna's brains with all the real issues we're having next Thursday. And I think that's going to be a great opportunity for everyone. So we've also got, of course, a pyjama party, 4 o'clock Perth time after work today. If anyone wants to join me, I'm putting on a really great party. I'm having the best champagne, the best canapes. Sorry, I can't share them with you. I've also got the fabulous Pauline Bright and Robin Moyle doing a mastermind on motivation next week. So that's going to be a great way to start off the week, isn't it, Pauline? I've got you on mute.
It certainly is. That's the right response, isn't it? No, I'm looking forward to that. It's going to be great.
It will be wonderful, and Robin's an absolute dynamo, so I can't wait to see her. And then we've got the next day, on the 7th of April, we've got the roundtable with Becky Sangster. She's our marketing guru, so I'm looking forward to actually hopping onto that. We actually do a deep dive, a really quick one into that, in terms of bringing our problems into the boardroom and doing some rapid ways of opening up those problems and getting peer-to-peer and Becky's input into solving them. So it'll be another experimentation and seeing how we do that online. And then, of course, on the Thursday, our second session of the boot camp, and there's lots more. There's so much going into our calendar now. All the different events that were being planned for each of the different states are all now online, coming online, available to everyone. And in actual fact, I think Businesswomen Australia is better than it was when we were limited by each of our sort of regional boardrooms and the size and capacity of what we were able to cope with. We're now able to offer so much more. We've got I've been in so many meetings this week with all our premium members around each of the states, and you're going to be blown away by what's coming online. There'll be something every day. We're getting to that point where I'm going to have to bump up the marketing team because we have got a lot to promote and a lot of opportunities, and I think businesswomen everywhere are just going to feel that this is amazing to be able to jump on and get access to this sort of stuff. And we're bringing it all on free for members, and anyone who's thinking about membership, and even if they're going through a tough time and thinking about membership for a long time, we're not going to be chasing people down to join as members right now. We just want to really support and make it all accessible so everyone's getting the help they need and feeling connected and not isolated. So thank you very much, Donna. That was amazing. I've learnt so much. My brain is really feels like it's been in at the gym, so that's good. I'd love to. There'll be questions, I know, and I know you're going to say I covered that, but there's only so much stuff that my brain can cope with, and but you know, between now and next week, I'm really going to trial the cabinet stuff. I'm really going to get all my stuff that's essential documents up there. What a great safe storage. I mean, that's just fantastic. I hadn't even thought about using the cabinets in that way. So all my insurances, all that sort of stuff, whack it up there. And we'll have some questions. If we've got questions in the meantime, we'll email them to you too, Donna, so that you can make sure you include them in the agenda. Anyone who wants a copy of the recording, I've recorded it, and I'll share that link to Donna. She can do a follow-up to everyone, and so that you can access the recording as well, so that you've got this to go through and find that little spot where you might have had to nip out or you couldn't quite understand. This is a really great way of learning. So thanks very much, Donna. You've put an incredible amount of effort and time into preparing this, and for us to be able to pick your brains like this for free is absolutely amazing value. I really appreciate it. I'm sure everyone else does too.
Yeah, thank you.
Yeah.
Sorry,
Great, thank you.
sorry, it was a little bit of death by PowerPoint, which I really didn't want it to be. It was
Can you
supposed to be
stop saying sorry? I'm going to come over there and slap you. I'm going to have a sorry jar, and honestly, every time you say sorry, you're going to give me bloody, make it $10.
Because then you'll be within social distancing.
You can pop it into my bank account every time you say sorry. Anyway, let's enjoy this afternoon. I'll see you at 4 o'clock. I'm going to go and find some jammies, and we'll be back online for a drink after work. In the meantime, I've got a few meetings I've got to head into. Lovely to see you, beautiful girls.
Thank you.
Thanks so much, everyone.
Thank you. Thank you.
Bye.
Oh, someone's dog's barking. Hang on, I've got to work out how to
Turn it off.
recording.